The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts, let's have a look at what traders are watching. US President Trump promising to impose a 50% tariff on imported copper, followed by levies on semiconductors and pharmaceuticals. A day after President Trump threatened 14 trading partners, including major exporters Japan and South Korea, with sharply higher tariffs, he reiterated his threat of 10% tariffs on products from Brazil, India and other members of the BRICS group of countries. He also said trade talks have been going well with the EU and China, but that he's still ready to slap heftier tariffs on EU exports. Well, after the RBA surprised markets by leaving interest rates on hold, Australian three-year government bond yields rose to 3.48%. The 10-year rose to 4.36%. Markets are now pricing a 90% chance the RBA cash rate will be cut by 25 basis points at the next meeting mid-August, with 3 more cuts forecast for this easing cycle. The US Treasury yield, the 2-year, little changed at 3.9, the 10-year around 4.41%, and the US dollar index rose slightly while the yen remains under pressure after President Trump reiterated his plan to impose 25% tariffs on goods from Japan. The Aussie dollar tracking at 65.3 US cents. Let's get into the charts now and join Jonathan Takadina from MPC Markets. And of course, it is all about copper. What do we know in terms of revenue and how this is going to affect some of the miners, Jonathan?
Yeah, so basically, if you have a look at the video last night, it seems like Trump almost made up that 50% number on the spot. So the copper futures reacted, but the actual miners themselves, the response has been a little bit muted because, you know, as we have seen, the market's kind of, how can I say, they're wary of whenever Trump makes these big sort of statements, how it actually, you know, the market reacts is a little bit more muted nowadays. It's the reaction isn't as swift. So what I've done is I've just brought out a chart and talked about the top 5 in terms of market cap on the ASX. Here we go. There we go. Copper revenue in US dollar billions. So what I actually, you know, everyone knows about BHP, Rio, that they're the main stalwarts. In terms of revenue, it's massive for them. In BHP's term, copper is only 33% of the actual revenue. Rio is actually even less, at 16%. And the 2 I want to talk about today is Capstone Copper, which is CSC, and MAC Copper, which is Metals Acquisition. That's what it's short for. And the revenue for CSC is 1.54 billion. But the thing is, the actual revenue is 96% of its exposure. So if you want pure copper, CSC at 98.6% and MAC Copper at 98% is actually a more pure copper play in terms of listings on the ASX. But you can just see in terms of revenue, the BHP Rio, they pretty much daunt the next few. And then the thing is, within these 3, it gets even smaller as you go down to the explorers and even to the micro producers. So, while we do have a lot of copper here in Australia, it's all about the big names.
Absolutely, BHP dwarfing even Rio looking like there. But let's look at some of those smaller names and kick it off with Capstone Copper. What do you see as a potential upside for this stock?
Okay, so with Capstone Copper, it's actually all their operations are in North America. So their main mine is the Pinto Valley mine in US, and they've got operations in Mexico and in Chile. Now, the thing is, they're at 1.87 billion market cap. So, you know, in comparison to Rio, it dwarfs them. But in comparison to Sandfire, which is at about a 5.3 billion market cap, it does compare quite reasonably. And as I said, they've got a pure copper exposure. 96% of their revenue comes from copper, and like pretty much the rest of it is just all tailings there. So it's one to keep an eye on. I'm not saying it's a buy right now, but in terms of ASX listings, just don't look at BHP, Rio, and Sandfire.
All right. So another one that you mentioned earlier, and I think it was the one that had the smallest line, is MAC Copper. What should we be looking at here?
Yeah, so MAC Copper, it is smaller, but the thing is, in terms of market cap, it is quite reasonable. So the market cap is only 710 million market cap, but their revenue is 336 million, all in copper. I think it's 98%. So even smaller tailings than CSC. Yeah, so it is quite small in comparison, but the thing is, it is a pure copper exposure. And the great thing is that the actual mine is here in New South Wales. It's out in Cobar. They do 40,000 tonnes per year of copper production and employs 500 people. So if you want to support local, it is one to keep an eye on. And so that's they're the two sort of next level copper producers. Because of that spike in copper last night, I'm saying just keep an eye on these as a watch list. I'm not saying go buy them right now, but what I wanted to highlight is that we do have options other than BHP Rio here on the ASX.
All right, always a pleasure to have you and your charts, Jonathan. Thank you. Have a great trading day. Jonathan Takadina from MPC Markets. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.